They told you it was a distraction. They told you it was a speculative bubble that would pop the moment the holidays were over. But while the world was distracted by the festivities of December 2025, a seismic fracture opened up in the foundation of the global economy, and the world's richest man just sounded the alarm. Today is Saturday, December 27th, 2025, and as you watch this, we are witnessing a Sigma 5 event, a statistical rarity that has never happened in the history of the modern silver market. The kill switch didn't just fail, it was completely vaporized by a convergence of military force and resource nationalism. As we sit here right now, the silver spot price has shattered the technical ceiling, exploding past $79 an ounce with an intraday peak reaching $79.70. We are talking about a vertical 10.21% gain in a single session. A move so violent that it has broken every traditional trading model used by the big banks in New York and London. But this isn't just a number on a screen. This is a panic. And the panic just went nuclear because of a single post on the platform X. Elon Musk, the man who controls the most silver-dependent industrial empire on Earth, just broke his silence with a warning that should send a chill down the spine of every person who doesn't own physical metal. Musk's words were simple and terrifying. This is not good. Silver is needed in many industrial processes. If you want to understand why the CEO of Tesla and SpaceX is signaling a code red emergency, and why the paper market is currently in a state of functional collapse, you need to stay tuned for every second of this broadcast. I'm Kevin Huang, and this is Markets in Context. If you want to stay ahead of this systemic breakdown and get the data that the mainstream media is too afraid to report, you must subscribe to the channel right now and hit the notification bell. We are tracking this squeeze minute by minute as the January 1st deadline approaches. The reason Elon Musk is panicking isn't just about the price. It's about the total disappearance of supply. According to a global intelligence report released today, the People's Republic of China has just confirmed the operational details of a catastrophic export ban. Starting January 1st, 2026, just a few days from now, the world's primary refinery of silver is effectively shutting its doors. Beijing is moving from strategic hoarding to total resource control. They have introduced a new regime of export licenses designed to exclude almost every Western trader. To get silver out of China after New Year's Day, an entity must demonstrate a production capacity of at least 80 tons, hold $30 million in credit lines, and receive state-level approval that gives Chinese domestic needs absolute precedence over the rest of the world. This is a pivot of economic warfare. While the West thought it was making progress on de-risking by diversifying rare earth elements, China just pulled the rug out from under the one resource that is actually insubstitutable: silver. Without silver, there is no green transition. There are no solar panels, no electric vehicles, and no high-end AI electronics. Elon Musk knows this better than anyone. Tesla's massive growth in the EV market and its dominance in solar technology are now devouring physical silver at a rate that is mathematically unsustainable. The demand from companies like Tesla is what we call anelastica. It doesn't matter if the price is $79, $100, or $300. They have to buy it to keep the factory lines moving. But here's the reality that the report confirms. The physical vaults in the West are empty. Retail giants like SD Bullion and AppMex are already showing sold-out status on Silver Eagles and 100-ounce bars. People are traveling for hours across state lines just to find a coin shop with a single ounce of metal. The psychology has moved from speculation to survival. And while the retail public is panicking, the military situation is making it impossible to refill those vaults. The report highlights a total and complete blockade currently being enforced by the U.S. Navy in the Caribbean. We are seeing active seizures of oil tankers like the Centuries and the Bella One as the U.S. intensifies its maximum pressure campaign against Venezuela. This isn't just an energy play. It's a geopolitical firestorm that is raising global insurance costs and disrupting the very shipping lanes that move physical silver from South American mines to global refineries. Combine this with the sudden U.S. airstrikes in Nigeria targeting ISIS and the high-profile assassination of a Russian general in the heart of Moscow today, and you have a perfect storm of systemic risk. Capital is fleeing the digital and entering the tangible. We have seen a total disaccoppiamento between silver and Bitcoin today. While the digital gold narrative is being tested by crumbling physical infrastructure, silver has sobreperformado Bitcoin by nearly 190% over the last 4 months. The world is realizing that in a conflict scenario, you can't build a weapon system or solar array out of a blockchain. You need the physical connectivity and material availability of the white metal. The paper market is currently a ticking time bomb. The report estimates the ratio of paper silver to physical metal is now a staggering 356 to 1. That means for every 1 ounce of silver in a vault, there are 356 digital claims on it. If even 1% of those paper holders demand delivery, the COMEX will experience a delivery default. The CME Group is so desperate to cool this off that they just raised the margins for silver contracts to $25,000 to force out the small players. But it's not working. Industrial buyers don't use leverage. They use cash. They are buying everything that isn't nailed down. The China syndrome is accelerating. Silver inventories at the Shanghai Gold Exchange and Shanghai Futures Exchange have plummeted 61% this year to decadal lows. China isn't just stopping exports. They are about to become a vampire on the global market, sucking in every available ounce to protect their solar dominance. This is why the price is in backwardation. People are paying a premium just to have the metal now because they don't believe it will be there later. We are entering a phase of price discovery where historical resistances are meaningless. The RSI is at 93.86, the highest level since the Hunt brothers tried to corner the market in 1980. But this time, it's not two brothers. It's the entire world's industry fighting over a dwindling pile of metal. While big banks are targeting $100, the report mentions scenarios where mania could drive the price to $300 an ounce if the masses start to panic. Elon Musk's warning was the final confirmation. If the man who needs silver more than anyone else is telling you, this is not good, you need to listen. The gap to $100 isn't just coming, it's here. The system is broken, the arbitrage is impossible, and the countdown to January 1st has begun. The data coming out of Shanghai right now is absolutely unprecedented. In a healthy market, traders look for a small discrepancy between London and Shanghai to make a profit. But today, the arbitragio is broken because the physical metal is literally trapped. You could theoretically buy silver in New York for $79 and sell it in Shanghai for a record premium, but you can't get the metal through the customs gates. This is the definition of a closed-loop system collapse. Think about the scale of what is happening. The China Ministry of Commerce, or MOFCOM, isn't just asking for paperwork. They are creating a bottleneck that will starve every Western car manufacturer and solar farm. If you are Tesla, or Ford, or Apple, your entire first quarter of 2026 production schedule just became a giant question mark. This is why the mining stocks, like Pan American Silver, are detaching from the rest of the S&P 500. Now, while the broader market is flat, PAS gained nearly 3% today because they are the few who actually own the ground where the metal comes from. But don't assume the miners can save us. The report makes it clear, global production is down, and replacing reserves is becoming costly and technically complex. We are entering 2026 with the fifth consecutive year of a structural deficit. The world is using more silver than it digs up, and the gap is being filled by prosciugando existing vaults until there's nothing left. But here's the detail that the mainstream analysts are missing, and it's the reason why the industrial world is currently staring into the abyss. The thrifting era is over. For years, engineers have tried to reduce the amount of silver in solar cells and electric vehicles to save costs, but we have hit a wall of pure physics. Silver is the most conductive element in nature. Alternatives like copper simply do not have the same efficiency and are prone to oxidation, which ruins the lifespan of a multi-million-dollar solar array or an EV battery system. In a world where energy efficiency is the only thing that matters, you cannot substitute silver without sacrificing performance. This makes the industrial demand anelastic. It means the giants, like Tesla, Samsung, and Apple, will pay any price just to keep their assembly lines from stopping. This is precisely why Elon Musk's intervention on X today is so critical. When the CEO of the world's most advanced tech company says this is not good regarding silver supply, he isn't talking about a price hike. He is talking about a systemic failure of the supply chain. Musk's concern has acted as a validation signal for the entire market, triggering algorithmic trading and massive retail inflows. If Tesla is worried about the physical availability of the metal, then every other tech company on the planet is currently in a state of emergency. While the industrial side is panicking, the financial side is witnessing a total breakdown of trust. Look at the CME Group's actions today. In a desperate attempt to stop the parabolic move and protect the clearinghouses from a total blow-up, they just hiked the initial margins for silver futures to a staggering $25,000 per contract. Their intent is to force out the weak hands, the retail speculators using leverage, but they are fighting a war they've already lost. This isn't a paper squeeze driven by Robinhood traders. This is a physical shortage driven by sovereign states and multi-billion-dollar corporations. Margin hikes don't affect the industrial buyer who is paying cash for immediate delivery. If anything, this move by the CME will only reduce liquidity and make the next leg up even more violent. The paper versus physical war has reached a breaking point. The report confirms that the registered stocks at the COMEX, the actual metal available to satisfy contracts, have plummeted 70% since 2020. We are now operating at a ratio where there are 356 paper claims for every single ounce of physical silver in the vaults. This is a statistical impossibility that can only end in one way, a delivery default. The moment a major institution demands their physical metal and the COMEX cannot provide it, the paper price becomes a fiction, and the real price for physical silver will go to the moon. We are seeing this reality play out in the backwardation of the futures curve. People are so desperate for silver now that they are paying a massive premium over future prices just to get it delivered today. And while the financial plumbing is bursting, the geopolitical map is being redrawn in real time. The assassination of Lieutenant General Fanil Sarvarov in the heart of Moscow today has elevated the global risk premium to levels we haven't seen in decades. When a high-ranking military official is killed by a car bomb in the Russian capital, the risk of a disproportionate and uncontrollable response skyrockets. This is pushing institutional capital away from digital assets and sovereign debt and toward non-sovereign tangibles. You cannot freeze a silver bar in a vault the way you can freeze a bank account or a digital wallet. In South America, the U.S. Navy's blockade is actively interdicting the shadow fleet. The seizure of the tankers Centuries and Bella I proves that the era of globalized, free-flowing trade is over. We are moving into a world of resource nationalism and sanctioned corridors. This is the perfect storm that the report describes, a convergence of Chinese export bans, U.S. military aggression, and an insatiable industrial appetite for the white metal. So where does this end? The psychology of the market has shifted from if to how high. A survey of retail investors shows that 57% now expect silver to smash through $100 an ounce in 2026. But the veterans, the people who remember the Hunt brothers in 1980, are looking at the $300 level. If this turns into a true mania, where the general public begins to panic buy silver just to protect their purchasing power, we could see a move that mirrors the most explosive periods in crypto history. The RSI at 93.86 tells us we are in overbought territory, but technical indicators don't account for a military blockade or a total export ban from the world's largest producer. The $79 silver we are seeing today is a signal that the old order is dying. It indicates a total loss of confidence in the ability of central banks to maintain stability. If the dollar continues to be armed through seizures and sanctions, the world will continue to flee into the only assets that cannot be printed, gold and silver. We are witnessing the birth of a multipolar monetary system where resources, not treasury bills, are the true measure of a nation's wealth. If you haven't already, you need to ask yourself, do I have enough physical protection for what is coming in 2026? The question is no longer, what is the price? The question is there any left? If you found this breakdown of the December 27th intelligence report valuable, make sure you like the video and share it with those who are still asleep to this crisis. I'm Kevin Huang, and this is Markets in Context. Subscribe now to stay informed on the front lines of this global squeeze. We will be monitoring the Shanghai Open on Monday very closely. If the premium continues to widen, the $80 floor will be firmly established, and the race to $100 will be in full swing. Hold your physical. Protect your family. The system is broken, and reality is taking over. I'll see you in the next update.